While life is full of risks, and you certainly can't avoid them all, you can manage those risks and find ways to protect yourself from them. The main way that most of us manage risk is by having insurance. So let's spend a few minutes discussing how you know what the different types of insurance are and what you may need. Insurance itself does not eliminate risk, but what it does do is allow you to manage that risk by sharing it with others. When you buy an insurance policy for your car, you may pay $1,000 in premiums for the first year of your insurance coverage. And let's say that at the end of that first year, you're in an accident and you suffer what is known as a total loss, meaning that it would cost more to fix your car than it's worth. So the insurance company pays you that value, $15,000, which is what the car is worth at this moment. Now, you've paid them only $1,000 in premiums, nowhere near the $15,000 yet. So how can they afford to pay you that much? It's simple, shared risk. They are collecting premiums from hundreds, thousands, or even millions of customers, most of whom will not suffer losses, and certainly not all at the same time. So your policy has allowed you to share that risk with all of the other people who buy similar insurance from that company. This is the most affordable way for most of us to manage the risks and that we are able to insure ourselves against. For the most part, you'll need to know about 4 main types of insurance that many of us need throughout our lives: homeowners or renters insurance, automobile or other vehicle insurance, health insurance, and life insurance. But what if you don't own your home? If you rent or lease, renter's insurance is what you'd need. Renter's insurance may be required for some leases, so it's always a good idea to be absolutely sure if you need to have it. But even if it's not required, don't overlook this easy way to manage your risk. If your apartment building has a fire, your landlord's insurance will cover his or her property, the structure, and the land, but will not cover yours, so you could lose all of your belongings. A renter's policy will cover your personal items that you keep in or around the residence. Renter's insurance is generally much less expensive than homeowner's insurance, precisely because the insurer is only insuring your personal property, not the structure or land, which would be much more expensive to replace. With either homeowner's or renter's insurance, you'll be able to determine your coverage level, as well as whether you want to insure the property for actual cash value or replacement value. Actual cash value is what the item is worth today, while replacement value is what it would actually cost to replace. For example, a 2-year-old TV may be worth $100, but if you had to go out today and buy a new one just like it, that may cost you $400. So it's important to know what level of coverage you want to pay for. Health insurance is the type of insurance you'd have to cover your medical needs. While in many countries the government may manage the health insurance market, in the United States, only certain vulnerable populations receive health insurance through the government. Specifically, Medicare serves older adults, and Medicaid serves low-income individuals. The rest of the population typically obtains health insurance through their employer, who often pays part of the premium for the employee, or through what is known as the Affordable Care Act healthcare marketplace. The ACA, also known as Obamacare, is a set of laws making insurance available and requiring insurers to provide certain types of coverage to policyholders. Most health insurance is one of 2 types: low deductible or high deductible plans. In a low deductible policy, the consumer pays higher premiums each week, month, or paycheck, but has fewer out-of-pocket costs for things like doctor visits or prescriptions. In a high deductible policy, the premiums are lower, but the insured individual must pay much more of their care until they reach that deductible. In both cases, there's a maximum out-of-pocket cost associated with the policy in a given year. So if you have a major illness, there is a limit to what you would need to pay for on your own. It's worth noting that premiums themselves do not count toward your deductible. The deductible must be met or satisfied through actual medical expenses you've paid to a doctor, hospital, pharmacy, or other provider. Finally, life insurance is a policy you might buy that would pay someone you've designated as your beneficiary if you should die. The main purpose for life insurance is to provide financial protection and support to those for whom you are financially responsible. For example, if you're a single individual with no debt, you may choose to have only a basic life insurance policy to cover any funeral costs if you should die an untimely death. But if you have young children, a dependent spouse, or a significant amount of debt, you might have a larger policy to make sure that your lost income is replaced by the insurance payout, and that anyone you leave behind can meet their own needs as well as pay any debts. If you should pass away and leave a spouse and young child, your insurance policy would need to help your family to maintain their lifestyle without your income, and perhaps even to provide for future needs such as education that your paycheck would have likely helped to pay for over the long term. Because a healthy young person is much less likely to die than even a healthy 80-year-old, insurance premiums are cheaper to buy life insurance for that young person, but also probably even more critical. It's hard as a young adult to think about your own death, but thinking about the financial impact on those you leave behind will help you to realize that it's important to have some level of coverage. The cost is not likely to be great, and your employer may even provide some basic coverage as part of your employment benefits. So there are many types of insurance to cover different aspects of your financial life and property. What should you consider when you're deciding what you need? The first thing is to know what you can afford. Even if your employer provides and subsidizes your health insurance, you're likely to have options that are more or less expensive. Knowing what you can afford is great in helping you determine how to balance the coverage you want or need against the premiums you'll have to pay to get it. If you're a very healthy single person, it might make more sense to pay a lower health premium for a high deductible policy. Most of your medical expenses in a year would then be paid directly out of your own pocket, but the policy would still protect you against any significant expense if you had an unexpected surgery, for example. However, if you have health conditions that you must manage regularly, or if you have small kids, it's probably worth considering a policy that has higher premiums, but allows you to pay less out of pocket for each illness, office visit, and so on. The deductible is another important consideration. How high is it, and can you afford to pay for any loss or incident that is less than that? If you have a car accident and a $1,000 deductible, will you have that $1,000 saved up so that you can get your car repaired, or would you prefer to have a higher monthly premium and only a $500 deductible? Finally, as with any risk, you need to think about the likelihood of a loss from that risk relative to the impact it would have on you if it happened. If you commute 25 miles to work in your car, and you have no friends or relatives nearby and no public transportation, then you probably depend pretty heavily on your car to get to work and keep your job so you can earn money. The likelihood of you being in a car accident may be higher than average due to the amount of driving that you must do, and the impact of a loss would be high as well. If you lost your car and weren't adequately insured, you may have no other way to get to work and could conceivably lose your job. Having as much insurance as you can reasonably afford will help you to minimize your own financial risk and loss. Insuring yourself against loss is smart. Knowing how to balance the price you must pay for insurance against the likelihood and impact of any loss is even smarter. Insurance isn't free and it doesn't pay for everything, but it can help to protect you financially against a catastrophic loss or major unexpected expense. Finally, be aware that any type of policy needs to be carefully read and understood so you know what is covered. Most policies have certain exclusions. A common one might be that if you have a tree on your property that falls and damages your home, your neighbor's home, or both, you're hopefully covered. But if the tree was dead and you should have reasonably known there was a risk that it would fall and did not take care of it, your insurance company could claim that you were negligent and they may refuse to pay. Most policies are very detailed around what they cover. Your auto insurance may not cover anyone but you who's driving your car, or may not cover you if you use your car to deliver pizza or as an Uber. As a consumer, you have to be aware of what your insurance covers so that you have the greatest likelihood of having any claim paid if you suffer a loss. In the final part of this lesson, we'll have a quick knowledge check so that you can check what you've learned.